What's up, guys? This is Tyler from Division One Trading. This is my free Forex YouTube course. I'm going to try to keep things pretty short and sweet, down to the point. We're basically going to be covering Forex basics, kind of going into some intermediate stuff, but mostly just basics and how I see the market in a nutshell, basis how I trade the markets. So today we're going to be going over candles. So candles is kind of the first thing that you start with, and go ahead and read this required government disclaimer. Pause the video, make sure you read all of these. So candles, so we're gonna be going over candles. What is a candle? First of all, we call them candles because they look like candles, right? If you have a little candle, you got right here, right? This is what you call the body, right? That would be the body of the candle. And then we'd have this little piece here. We call that the wick, right? This little thing. So like this is where the flame would go. Draw some nice flames, right? And that would be the wick. So we also have what's called the tail down here. But I just call them both wicks, right? So that's the technical term, but this is the way I see it. Wick, body, wick. So yeah, we'll get into the rest of that. So really, and that candle, right, that piece we were looking at represents any movement, or really all movement, any and all movement in price in a specific time interval, right? These candles come in time intervals. So the most popular ones that I look at are the 5-minute, 15-minute, 1 hour, 4 hour, and then daily, monthly, weekly. Right? So if you have a 5-minute candle, this entire candle represents 5 minutes. If you have a 1 hour candle, right, this entire candle represents 1 hour, right? So again, right, this is what they look like. Bodies, bullish, right? This is where price is opening here, right? So say this is a 15-minute candle and say that this is noon, right? So we're at noon. Then at 12:15, price was higher, right? So say here it was $1 and now it's $1.50. Right? So if price moved from $1 to $1.50 between 12 and 12:15, that's what that candle would look like. Vice versa, right? If this was 12, this candle opens, and then 12:15 when this candle closes, right? Here in this example, it would have moved from $1.50 down to $1. Right? And that's because time moves this way on the chart, right? You have price, which moves up and down, and then time can only go in one direction, right? So at 12:15, it's either higher or it's lower, but it continuously prints the next candle. So, right, we start putting it together. We have a bullish candle with a wick and a tail. Bearish candle with a wick and a tail. So now we're going to start getting into the anatomy of a candle and really just getting into what is going on in that candle as a whole, right? So when we look at a candle, like we said, it can be, this candle can represent a whole day, or just 4 hours, or just 1 hour, or just 15 minutes, or even just 5 minutes. Same with this. Right? Again, this is the opening, and then it moves up the closing. So if this was a day, this would be midnight, and then the close would be 11:59. Right? And then this would be the whole movement for the day. It would be a bullish day. So this is what price would look like, right? It would open, trade up, and then close. And then bearish, right? It would open, trade down, and then close, right? And this is where we start making things a little bit more interesting, is when we start including the wicks and the tails, right? So now the candle changes and shifts a little bit. So now we can see the candle, it opened, we know it ended bullish, right? So at 12:15, we know it ended here. So what happened is the candle opened, price went down, then it went up, traded back down, and closed. Let me draw that a little better. So right here, price opens, right? That's this part here, that black line. Then it trades down, right? That's here. Then price trades up, right? All the way to the top of this wick. Right, so price trades up to the top of the wick, right? Say that's at 12:13. Then the last 2 minutes comes down, 12:15. Price was here, so it closes. Now we move to the next candle. Right, so vice versa with a bearish candle. Price opens here, then trades up, trades down, then trades back up and closes, right? So wherever 12 o'clock is where that opening stays. Wherever 12:15 is, that's where it closes. If this is, right, a 15-minute chart. So this is called top-down analysis. I just kind of nicknamed it in the inception theory. It's just the way that I think about it. So in the movie Inception, Leonardo DiCaprio, the main actor, it's just a theory where he can go into someone's dream. If you haven't seen it, if you've seen the movie, you're familiar with it. If you haven't, I'm just going to try to describe it. But he can go into someone's dream, right? And once he's in that first level, then he can go into while that person is inside of their own dream, they fall asleep and he can go into that dream. So there's another level, right? So they're within the same dream, right? So the same is for time frames, right? So if this is a daily time frame, the 4-hour time frame is inside of that daily time frame, right? The 1-hour time frame is inside of the 4-hour, which is also inside of the daily. Then you have the 15-minute, right, which is also inside of the 1-hour, which is also inside of the 4-hour, which is also inside of the daily. And then the 5-minute, right, so on and so forth. Right, so a daily candle, right, we could have 6 4-hour candles, right? So one day or 6 4-hour candles, right? And here's that same thing, right? 15 inside of the 1-hour, inside of the 4-hour, inside of the daily, right? So this is pretty much what I'm saying, right? If we have one 4-hour candle, we could have 4 1-hour candles that look like this. They don't all have to be bullish, right? One of the candles could have traded down, but over the course of those 4 hours, this is what the net was. So we're going to take a quick look at this example. So we're looking at the daily chart. We're looking at this candle here, this green candle. So we're going to say, what does this candle look like as we kind of chop it down into the time frame? So this rectangle here, this blue rectangle, is not going to move. It doesn't move the whole time. We just change time frames. So we're going to start on the daily. We're looking at this candle. Now we go to the 4-hour. Right now you can see we did have this kind of movement, right, where it's just a open, low, high, and then close. And then here you can see it's more of a open, low, high, close. It's the same thing, just within different time frames. So now we'll go down to the 1 hour. You can see the same theme. Let me make the line a little wider, right? The same thing. So now we go to 15-minute, same thing. Right, so this blue rectangle here represents that whole daily candle. And now you can see there were however many 15-minute candles within that. Right, and then the wicks would be here at the open. This is what the body would look like, the open and the close. So the body would be here. This area would be the wick. This area and this area here. And then now you can see on the daily, we had that bearish engulfing right there. So when this candle opened and traded up, right, because we know the anatomy of a candle, right, if it opens and trades up, it's most likely a bearish candle. Not guaranteed, but in higher probability situations. So when we get here and we're on this 1 hour chart and we see this candle trade down, right? And it's obviously it's oversold. If you check your RSI on this pair, right? It's oversold. And then look, we had 1, 2, 3 bearish days in a row. And then that third one pushes down again without having any major retracement, and then gives us that opportunity. Because we understand the anatomy of the candle, we can capitalize on this move. And we're going to be going over this same trade in the next couple videos, just using different techniques and showing how we could have entered on trades just like this using these techniques. All right, guys. Thanks.